Well, if you want to go public in 25, you should have started. So number one, if they haven't started yet, they're not going to get public fast enough.
Hello, I'm John Generone, Editor-in-Chief of IPO Edge. Very happy to be back at the New York Stock Exchange for the Private Equity Capital Markets Summit. I'm here today with Don Duffy, the president of ICR. Don, thanks for joining us.
Thanks, John. Thanks for having me.
So, Don, we've been asking a lot of advisors, investment bankers, including one of your guys, Steve Parrish, when the IPO market's going to really burst open. Steve, along with Goldman Sachs, Morgan Stanley, I'm hearing 2025 is going to be a banner year. What's holding us back right now?
Yeah, it's a good question. Look, I think a lot of the banks, a lot of people who follow this market closely feel like 25 is certainly going to be a better year than 24. I think as we were going through the year, the things that people thought were holding us back changed. I think most people felt like the interest rate cut was going to open the doors, cause a few more companies to push to try to get a deal done towards the end of this year. I think what actually happened, that rate cut came, I think companies that were ready said, hey, there's a little volatility in the market. There's a lot of noise around this election. Let's just wait. Although sitting here on the NYSE floor, Ingram Micro just priced today middle of the range. So certainly some people decided to test the markets. I think what you're going to see is after the election, people push forward with their plans. They'll, I think, feel a little bit more comfortable, and you'll see probably not as much, a lot of activity prior to the end of this year because of the window and the holidays. But I think you're going to see a flurry of activity start off early next year.
Great. And what kind of advice are you giving to clients who are thinking about going public 2025, 2026? What kind of prep should they be doing right now?
Sure. Well, if you want to go public in 25, you should have started. So number one, if they haven't started yet, they're not going to get public fast enough. If you haven't started that work, it's really the way to think about IPO preparation is about a 12 to 24 month cycle. Most of the earlier work has to do around accounting work. Making sure you've got, depending on whether you're a smaller company, emerging growth company, 2 to 3 years of audited financials. And then you want to make sure you're doing a lot of things internally, like building out your team, making sure you've got the infrastructure, and then most importantly, that you can behave and report like a public company. And so it starts there. It certainly gravitates towards developing relationships with constituents that you're going to have to deal with, the sell side, the buy side, starting to get to know what bankers could potentially take you public. So the way you think about it, we build out project plans for companies. We really suggest they kick off in that, call it 18 to 24 month window, and work through that process.
Gotcha. Now, Don, over the years, you've worked on some marquee deals, Shake Shack, Visa. Are there any lessons that you gleaned from some of those transactions that you could share with new issuers?
Sure. I think there are two important things, and let's make the assumption all the infrastructure and accounting work is done. I think where companies either don't spend the time or don't spend it strategically enough are on relationship development and models. And so let's just talk about relationship development first. Buy side and sell side. Today, the buy side is telling us they want to see a company 2 to as many as 4 times prior to an IPO. Why? Sounds pretty simple, but I think a lot of companies don't always get it. If you're asking me for a $20 million order on the IPO and I only met you in a 30-minute one-on-one, it's a little bit harder to convince somebody that this is a fantastic deal. So the biggest institutions want to develop a relationship with a company as a private company. 2, the sell side universe can be very helpful, but it's important for companies to get to meet them, to understand them. A good example, John, we worked on the Visa IPO. Visa did an analyst day as a private company. Yeah. We had over 25 analysts years ago there. We recently just did another analyst day for a fintech company and had quite a few people there. So they want to develop those relationships. And then last but not least is the model, right? And it sounds simple, but you had a tech deal. Ibotta missed their numbers that went public last year. Yeah. You have to understand that as a young public company, the buy side wants you to meet or exceed numbers that you put out. Yeah. And I think a lot of companies don't put the rigor into that process that they need to make sure they can be a young, successful company.
Makes a lot of sense. What about foreign issuers? Do you expect to see some of those coming in the next several months?
Sure. Yeah. You started to see this with like the Flutter transaction and a bunch of others. I think there are a couple of areas that foreign issuers are really gravitating to. Number one is the U.S. markets are the deepest pool of liquidity.
Yeah.
So when you think about trading volume, how to tap into the best investors, that's here. Number two, you've heard repeatedly from folks that the sector coverage here, particularly in areas like tech and healthcare, are second to none in the U.S. So that's the big banks really investing in high quality research.
Yeah.
And I think the third big area, and not surprising, is valuation. If you look across groups, and quite candidly, it's not just what I say, but what the CEOs have said themselves. A couple of international oil companies have said valuations are 2 to 3 times higher. I think when Flutter switched their listing, they had attributed to maybe 3 turns of EBITDA higher.
Yeah.
So I think the foreign issuers are looking at this market as an opportunity to get a better valuation. To some extent, deeper liquidity and a better following all play into that, but it creates really a win-win for those companies.
Great. Now, last question, Don. We're talking about IPO prep here today. That's the theme of the conference. But what if I'm seeking, a strategic transaction or a private equity buyer? Do I approach the preparation differently?
Yeah, it's a great question. And we actually talk to private equity firms and private companies about what we call liquidity communications. And you're absolutely right. A lot of companies are not on a journey to go public, but they're on a journey to sell themselves to another private equity firm or potentially find a strategic buyer. A lot of similar preparation we think has to go into it, but in addition, there are certain things that go beyond just basic accounting work. It's making sure you have a really good equity story. It's making sure the company's more visible. When you think about the amount of private equity held companies today, and how many of them potentially could come to market looking for liquidity in the next few years, you want to stand out. And so we specifically talk to those companies about detailed plans that are built around trying to get some media coverage, trying to make sure you're talking to constituents that follow that sector, like a sell-side analyst, showing up at some conferences. And so, in fact, we recently are working with a $1 billion in revenue direct-to-consumer brand that's down that path. And one of the things that they want to achieve is broader visibility for their transactions. So when they do come to market, they feel like they'll cast the widest net.
Gotcha.
I think it's very important, and certainly a lot of these entrepreneurs own a lot of equity in their businesses. You want to put your best foot forward before you take your business to market for a liquidity event.
All right, really insightful stuff. Well, Don, thanks for joining us. Always great to see you.
Appreciate it, John.
And we're going to sign off now. I'm John Janarone from IPO Edge, live from the New York Stock Exchange.